Right, oh, there you go. Mic's working, which is the first challenge. Thank you all for joining us today. I think we've got a fantastic panel here and should be a very insightful discussion. So, Stephen, I'm gonna kick things off with you. So no pressure. It's all it's got to be all uphill from here. So at least that makes life easy for you. It'd be great if you could tell us, please, a little bit about Sustainable Impact Capital and what Barclays is doing to drive the climate tech ecosystem, and why did you create Sustainable Impact Capital? What are you looking to solve? And tell us a bit about also what you've achieved so far.
Thanks, Oliver. So hi everyone, I'm Stephen Poulter. I run equity investing at Barclays, and within that mandate we've got this terrific opportunity which is called Sustainable Impact Capital. It's a on-balance sheet commitment, so it's Barclays' own money. We're investing £500 million in early stage climate tech companies. We typically invest in Series A, Series B, as I say, in climate technology that we think is going to be transformational for the world, and we want to help scale those companies. We're a strategic investor in the sense that we bring more than just a check, more than just money. We look at Barclays' entire ecosystem and sphere of influence, and we try and bring that sphere of influence to support our companies. So we commenced our mandate back in 2020 with an ambition to help our clients decarbonize. And one of the ways we can help our clients decarbonize, we think, is by investing in technology that will scale and will be the technology that the Barclays clients use in the future. So in order to help our companies scale, our portfolio companies, we make those connections, we make those introductions, we even bring them on panels like today. We've got two of our companies up here that you're going to hear from. In terms of what we've achieved so far, we're by the middle of this year we'd invested 166 million of the 500, and we've been investing a lot since then. We have invested in 20 plus companies, so it's very exciting times, and it's really satisfying to be on a panel, obviously with yourself, but with two of our companies as well, which you'll hear from this morning.
Brilliant, thank you for that. So we'll turn to the companies themselves next, and Jorge, we're going to start with you. It'd be great if you could, first of all, introduce who ZeroAvia is and what you're looking to do, but then also, you closed a $150 million Series C round earlier this year, and I think it'd be great for everyone to hear what are some of those lessons learned from that transaction that you can share. What went well, what was more of a challenge?
Sure, you understand that I can hijack the entire panel with this question. So, hi everyone, I'm Georgi, Chief Financial Officer of ZeroAvia. We're one of the clean aviation leaders. We started 7 years ago, and the proposition was very straightforward. So how to decarbonize aviation, which is one of the least disrupted or some of the least disrupted industries. Our main product is the hydrogen electric powertrain, which we right now are undergoing in certification. So we fly our 20-seater, 400 kilometers, 250 nautical miles, and obviously scaling up afterwards to the bigger turboprops and regional jets as well. So as Oliver mentioned earlier this year, we raised $150 million Series C round, co-led by Barclays Sustainable Impact Capital. Thank you, Stephen. But also actually it was an interesting mix of lead investors. Airbus, obviously for us it's the golden standard in aviation, participated as another co-lead, and Neom Investment Fund. And if I look at the lessons learned from this transaction, I think it's very fair to split them into two, with the capital markets and company specific. So from the capital markets perspective, and it will be interesting to know the feedback from investors over here, I think first of all, people need to go broad. So just going to, let's say, West Coast VCs and getting money over there just doesn't work. So for many reasons. So first of all, there's some cash preservation by investors, knowing that a lot of investments are underwater and therefore they need to support them. But obviously different regions, different investors have got different propositions right now. So going broad was number one, so that's why we spent a lot of time in Middle East. We're Anglo-American company, so I managed to get quite a few American investors as well. Number two, second lesson learned is you need to stay realistic. So especially about valuation and size. Going there and telling the world that you are double unicorn or something doesn't work anymore. So investors will lead the valuation, and you need to be realistic about this. So for example, the term sheet which we got at the end, we even had to price at a small discount to that initial valuation to ensure that we got the support of everyone, including the existing shareholders who are very price sensitive, and Alton said we're here with you for a long run, but also we want to ensure that the deal is rightly priced and you're not going to come out with a down round afterwards. And maybe a couple of company-specific lessons learned. First of all, looks like cash is king. No more long-duration assets. No more the revenue will come in 2035. And therefore, actually, we looked at our company and thought, okay, so how to ensure that even though that we're doing a breakthrough product, which has never been implemented in life, how to ensure that we can bring the revenue much faster. So we ventured into the component strategy, started working with not only with the passenger operators, but with cargo operators, even with defense. So US Army is one of our customers right now. And another lesson learned perhaps is you need to stay true to your focus. So what's your mode? So how you differentiate from others. So for example, we also look back and said, okay, we're an engineering company. Our IP, our core proposition is the engine. So therefore, going to infrastructure, going to software maybe wasn't the right thing for us. So yeah, so a lot of thinking and a lot of lessons learned and a lot of kind of going back to basics.
Yeah, thank you for sharing that. I think lots of useful insights for everyone to be aware of. Claudio, we'll turn to you, and again, it'd be great if you can introduce Energy Dome, what you're doing. I think for you, what's interesting is, as well as following that more, let's say, traditional sort of venture capital funding route, you also looked at a slightly different angle, looking at, and you announced this here in Dubai a year ago, pretty much the same time here in Dubai a year ago during COP28. But it'd be great if you could tell us a bit more about your overall funding journey and also specifically the project level capital that you raised. And why did you decide to also bring in that project level capital as well?
Yeah. So first of all, thank you very much for having me here. It's a pleasure. And I just 1 year after, as you said, the deal that we announced last year here at COP28. So I'm Claudio Spadaccini, I'm founder and CEO at Energy Dome. What we do at Energy Dome are huge, large batteries. So our technology is used to store electricity, to store solar electricity, and to make solar and wind available 24/7. We have a technology which is a compressed gas technology. So it is, and the beauty of the technology is that is a process innovation which is based on existing supply chain. So we use a supply chain which is available from oil and gas and power industry. We use compressor, expander, turbines, motor, generator, vessel, heat exchangers. So we started operation in 2020, and the existing supply chain is the reason why we have been able to deploy the technology already today. So coming to the question about our journey in capital rising, we have been able to raise 135 million since we started in, January, February 2020. And we went through, the pre-seed, seed, and Series A, and then Series B. But then when it came to deploy the first of a kind, the 20 megawatt, 200 megawatt hours, so a huge battery, to demonstrate the technology, we faced that issue also from, a more holistic perspective. So we don't need only to demonstrate that the technology works, but we need to demonstrate that the business case works. So our customers are there to see that our technology is producing, cash flow. We need to demonstrate that the technology put in place is able to generate value for our customer. So that is the reason why we embraced this, journey with the Breakthrough Energy together with the European Energy Bank, that they, equity and some venture debt, but conditional to the fact that we had to put in place and to be able to sign a serious off-take agreement. Because the off-take agreement at the end is the basis to demonstrate that there is a customer which is willing to buy the service that we are generating with our technology. So, and again, is in my opinion, is very valuable to be focused on the business that you are developing. And for us, it is important again, to demonstrate that our battery is where the value is. We are much cheaper than lithium-ion batteries. We last 30, 40 years instead of being degradable, and we use an existing supply chain, and we have almost the same round-trip efficiency. So the business case and the cash flow which will be generated by that are conditional to the investment that we got from them, and that to me has been the key.
Brilliant. Well, thank you for telling us a bit about what Energy Dome has been up to. Steph, I'm going to turn to you now, and it'd be great to hear how Dubai Holding is supporting impact-focused early-stage companies to scale. And I think particularly to hear from your end, how do you think that companies like the ones we've got on stage can work with corporates? I mean, some of them, we're obviously in a Jumeirah building at the moment, but so like some of the companies that sit within Dubai Holding to unlock different opportunities for growth.
Yeah, absolutely. So, I mean, I think what we've heard a lot so far is capital is important, yes, but I'm going to talk about maybe three other elements. So I think where corporates such as Dubai Holding can really support is through building partnerships, access to market, and you mentioned a word demonstration, maybe through demonstration projects and providing a platform for companies to trial, to test their product, and then also through capacity building. And so maybe to bring that to life with a recent example from Dubai Holding, where this year we launched our Innovate for Tomorrow Challenge. And this was about finding innovative solutions and companies that really at the forefront of addressing today's sustainability challenges. And we actually attracted over 150 applicants from 31 different countries, actually 68% of those from the UAE. And the winning solution, which is a company called Othello, and Othello are fascinating, they're actually a Norwegian-based startup turning plastic waste into low-cost building material. And what we did, or what we are doing with Othello, is we're actually providing a fully funded pilot. So we're using the vast ecosystem of Dubai Holding to really enable companies to scale, to test their solution, and to gain credibility. On top of that, we're also supporting the companies through networking opportunities and through access to investors. So both the winner and the runner-up, for example, have access to T-Con Group's In5 business incubator. And that's one of the leading business platforms here in the UAE. And it's helping companies through access to creative spaces, through networking, capacity building workshops, and again, access to investors. So I think, Ollie, to summarize, I think we've got a vast ecosystem that we can operate in, and we really welcome the opportunities to work with different companies to pilot. And I think, that's really where we can be that sort of test bed for innovation.
Brilliant. So thank you, Steph, for that. I think for anyone listening so far, it all sounds pretty rosy. Have a good idea, and there's lots of money out there, lots of people that want you to help. But as we all know, the reality is not quite as pretty a picture. So we're going to take a slightly different turn, and I think focus a bit more on some of the challenges and frankly, the practical realities of climate tech into venture capital today more broadly, but for climate tech potentially even more severe. So, Stephen, with that in mind, how do you think companies can stand out? Scarcity of dollars really an issue. You need to be differentiating yourself and standing out. And maybe if you can also say a little bit about for sustainable impact capital in particular, what makes you view an investment as being attractive?
Thanks, Oliver. So standing out, there's a lot of climate technology out there. You've got to be really working your networks. You need to be talking to lots of investors and building relationships with investors early. Ideally, a long time before you need to do your next raise. So when you are out there trying to do a raise, you've already got your Rolodex of contacts. In terms of what we might look for, I'd say if I can focus on 2 or 3 things, we look at a lot of things during due diligence, as you can expect. But I'd say as a starting point, we look at management. And we want a really evidence-based approach to what management have achieved. So if we're doing a Series B, we'll look at what the Series A milestones were. What did management say they were going to achieve? Have they? Did they achieve it on time, on budget? And obviously, things happen, so we'll be reasonable, we're flexible. So look at evidence to support management's assertions that they're going to be able to deliver in the future. We also look at relationships that management have. Are they operating in the right environment, the right kind of ecosystem? And we'll reference that. In terms of the product, we typically have a thesis for an area. So it might be that we want to spend time looking at the built environment. Does the product fit in with the built environment thesis that we've developed? If it does, is it a product where there's going to be a significant green premium for adoption? Or is it going to be economically rational for people to adopt this product regardless of sustainability credentials? And if we can invest in something that's got the latter, the chance of it succeeding is higher. And then I think something that's often overlooked, in particular in climate tech, and the reason why I say in particular in climate tech is because climate tech tends to be so capital intensive. The capital raises that need to happen at subsequent rounds just get bigger and bigger. So what we really look for is evidence to support the thesis that during the period between whatever, Series A and Series B, that the company's got sufficient runway to get to demonstration milestones, to get to value inflection points, so that there is then plenty of time after achieving those milestones to be out in the market, having those conversations with investors, and it's credible that they can raise the significant funds that they need, for example, for a first-of-a-kind plan, which might be a $50, $100, $150 million raise. So is it credible that the milestones can be delivered in that time period in order to be able to justify a raise at that kind of valuation?
Thanks to that, Stephen. Claudio, turning to you now, I mean, what does the future look like for Energy Dome as you try to navigate these challenges which Stephen has articulated? And how are you also thinking about this from a sort of global perspective as well, and where kind of Energy Dome goes next?
Yeah, thank you for the question. So, I mean, we are in a market which is global, because energy storage is required just everywhere. Decarbonized energy is required everywhere. And since we are a deep tech company, let's say that to scale up a deep tech company like us, it is very much about, let's say, demonstrating that the technology is de-risked and works, but also about demonstrating the project market fit. And I think that starting from that, because as I said before, we have also focalized the strategy of our capital rise into the, let's say, into business case, so in product market fit. So I think that now we have the advantage that we see a market which is just huge. So we have a pipeline of projects and a pipeline of potential customers out there which are asking for our technology. And so I think that our, let's say, itinerary starting from here forward, so we just needed to put in operation our first of a kind successfully, and then, next year we will enter in a Series C capital rise at corporate level that we will launch most probably, let's say, Q2 next year. And starting from that, then we will, let's say, we will also start the discussion with infrastructural fund because our technology is asset EV, and we need a lot of capital to deploy, let's say, all the plant that are required in our pipeline of projects. So, let's say, in conclusion, from our perspective, let's say we need just to focus on the right milestone, and then after we will demonstrate all the milestones, the investor will come and the investor will give us the money that we need to grow the capital, because the demand is out there and the business case are out there.
Brilliant, thank you for that. Jyrki, turning to you next. You've spoken about these challenges, but do you see any sort of regional differences around the world? How different bits of the world are looking at climate technology. It'd be great to also hear, where do you see as being particularly attractive, more broadly, but obviously from the point of view for ZeroAvia, where do you actually look to deploy your technology? Where do you look to set up and build your ecosystem?
Sure. So maybe I'll start with the second part of the question. So our technology can be used anywhere where there is aviation. So as simple as that. So obviously for now we're starting with a smaller aircraft, and as I said, we are undergoing certification for our 600 kilowatt powertrain, which can fly up to 400 kilometers. So any of the regional aviation can be already substituted, or hopefully will be soon substituted into hydrogen. Middle East is a great example, so anything in between the countries or within the country flights, any island nations, or for example cargo, because obviously where you fly shorter distances and deliver on dot-to-dot delivery. So for example, Amazon is one of our shareholders, and we're hoping that they will be one of our large customers as well. So is DHL, for example, on the customer side. So the application is immense. And a lot also depends on regions, because it's no surprise that while our technology has been proven, but we need infrastructure. And infrastructure, we're not going to do it ourselves, so we need the governments and the regions to support us in this. And over here, for example, there's a massive differences, which is, to me, was quite a surprise when I started in the company a few years ago. So for example, if you look at Asia, especially East Asia, Japan, South Korea, China, and Southeast Asia like Singapore, it's not the question of if and when, it's actually the question of how. These nations must be a little bit of a slow start on adoption, but right now if you go over there, so they said, okay, let's start working, the government supports us, so we just need to have a plan. So it's amazing, and I think it's very clear where it comes from, because obviously very little carbohydrate resources, so natural resources overall. Europe is an interesting case, because I think a lot of comes there from the whip instead of a carrot. So lots of legislation, but they want more punitive legislation. So i.e. the aviation companies, for example, airlines, need to decarbonize because they will be punished by the government. Equally, it pushes them to look at the short-term solutions. So for example, sustainable aviation fuel was for a long time as the word du jour, so to say, over there. However, we all know it's not necessarily the cleanest solution at the end of the day. However, it can be deployed right away. So, and I feel a bit bad about Europe, because I think it was leading the way for a long time in decarbonization and green economies, but somehow maybe it's actually falling behind of the US a little bit. And the biggest difference is the Inflation Reduction Act. So it's a 1 trillion legislation in the US, by the way, which is missing in Europe, I think it's fair to say, which was absolute game changer in the US, and people keep forgetting about this. Actually, American economy has been steadily decarbonizing, and we as a US company absolutely totally see it in the, for example, of the price of a hydrogen. So $1 trillion been employed in the US, and then the results are very visible. Now, no one knows what's going to happen with the incoming administration. Luckily, a lot of red states benefited from that legislation, so we hope that their trend on decarbonizing will continue, and they actually will continue leading the way. And lastly, on Middle East, I think it's amazing what's going on over here. You guys, especially UAE, put significant targets in front of yourselves. And then I'm really interested, and it's great to see, heartwarming, that you're leading the way. but now, so the promises are very high, the targets are very high, but you now need to deliver as well. So you now need to fulfill these promises, and it's great. So obviously we as Zero are here to help as well to deliver on these promises.
Brilliant. So thank you for sharing that. And I think it's particularly interesting also to see how these markets, regions have evolved, and what was necessarily leading is not necessarily leading today, and I'm sure will continue to change going forward. Steph, it'd be great to hear from you. I mean, we've heard about obviously two particular solutions to some of the challenges that we have as a world. But for you, what are some of the key priority areas where you would like to see solutions to some of these challenges?
So, I mean, I think we've just heard that the UAE is making, big, bold commitments and ambition, and that includes, corporates such as Dubai Holding, who also has their net zero 2050 commitment supporting the UAE ambition. And I think for that we need big, bold solutions. And Stephen, I'll start with something you said. You were talking about the built environment. That is definitely a priority area for us. And you mentioned the green premium and how you look at, whether companies can look at, economic, rational solutions. So I think finding solutions to, whether it's building materials particularly that are ready to enter the market, and then ideally are, achieving a cost parity, that's one area. I think we hear a lot about AI, and I will definitely touch on that as well. What solutions both in AI, digital options, whether it's digital twinning or solutions such as one company we've just started working with is Carbon Cipher. We actually just ran a challenge with Meta, and they won that challenge. They're going to be helping us with our Scope 3 emissions accounting, and I know that's a challenge for a lot of companies out there. And then maybe lastly, if I think about our hospitality arm and Jumeirah Group, it's really about food systems as well, and how can we transform our food systems? And that's both from how can we source more locally? So we're looking into a lot of vertical farming, hydroponics as a couple of examples, but also how can we manage our food waste? One example here is we're working with a company called Winnow, which is bringing actually AI to help us solve this challenge by really optimizing and looking at the food waste to produce, helping our chefs in the kitchen really minimize that. So I think, there's a huge number of opportunities, and what I would go back to saying is that, we're ready to look at pilots and to try, new technologies to bring them into our ecosystem.
Brilliant. Well, a fantastic call to action. So I think what we've heard from so far is an investor's point of view, a sort of more corporate point of view, two climate tech companies tackling very different challenges. We've heard a little bit about the successes, we've heard about some of the challenges, but I think a nice hopeful note that's sort of undercutting all of it. So my final question that I'm going to ask to each one of the panelists to close us out, and perhaps we start this side and work our way down. So Stephen, I'll give you the final words today. Very simple question for me to ask, very difficult for everyone to actually answer, because I don't think any of us have a crystal ball. But do you think that 2025 and going beyond is going to be a better year than 2024 for climate tech and climate tech financing? Claudio.
So it's a difficult question to answer, but at least I want to say that to me it will be a better year. Again, it will be more selective. So the longer we go into the itinerary, the longer, let's say, also from the investor perspective, in my opinion, there are more straight demand, and again, is about to give to the investor, let's say, to be ready completing all the milestones that we need to complete to offer to the investor the right company where they can invest. So in my opinion, will be a more selective market, but for sure, I really believe that 2025 will be finally better than 2024.
All right, I'll try with my crystal ball. So first of all, it wasn't a bad year for us with the 150 million. Jokes aside, I think it will have to be a better year overall. And I think it comes from two sides. So first of all, hopefully for investors, it's the easy environment, interest rates going down, so there's a less competition from public markets. But as a CFO of a tech company, what I'm looking at, there'll be significant natural selection if you want. Because if you look at, for example, Climate Tech 5, 6, 7 years ago, there were so many solutions. And sometimes you look at them and thinking, maybe it's a bit of a cynical view, how this going to work? And especially, Steph, I like your point about the green premium. So ultimately, these solutions, decarbonization solutions, they need to work on a standalone basis as well. They need to make a commercial sense. And I think we're seeing it already right now. So unfortunately, yes, there were a few companies going bust, but in most of the cases, the product itself was quite bad. And then ultimately, hopefully there'll be a bit less competition, there'll be winners will be a bit more visible, and the solutions will be more visible. And I'm looking forward to working in a way where ultimately investors will stop asking us, so, but you are more expensive. No, we're not more expensive. We can be cheaper than the conventional methods. And therefore, just to prove that not only we can bring good, but also can create significant financial resources to our returns to our shareholders.
So, Ollie, I'm ever the optimist, so I'm going to go with yes as well. I think, there's 2 points to this. I think globally what we're seeing is, and this is reiterated by the International Energy Agency, which is predicting huge growth in the clean tech market out to 2035. And then, of course, we've got companies such as Barclays and your Sustainable Impact Capital fund helping things along the way. But if I look at the UAE, for example, we've got more and more companies, obviously, with their net zero commitments. But we also have an environment here which is very open to business, to innovation. And so I really think that supporting ecosystem is out there. So to me, I think the foundations are there, the will is there, and the business case is crystal clear.
Right, Stephen, 3 positives, so you've got to keep it up.
Yes. Look, I'm a glass half full guy. I'm a venture capitalist, so I'm going to manifest positivity. I think it's important that we all believe. There's evidence already that 2025 is going to be better. We've closed some deals recently, and literally in the last month that we've announced, and they were very competitive. And that's a sign that there are more investors out there. There are lots of term sheets getting submitted. More term sheets tend to mean more founder-friendly terms, better valuations. As was mentioned, I think rates are expected to come down next year. There's limited evidence, but positive evidence that corporates are prepared to spend money again on decarbonisation. Ultimately, people need to buy these products. 2024 is a year where it was very difficult from a discretionary spend perspective. So the corporate spending had declined, which means it's more difficult for climate tech companies to meet their milestones because they're not selling as much. So I think there's evidence on the buy side in terms of the demand side for products. I think there's evidence to support the notion that there's more risk-taking available. You put that together, I think 25 is going to be a good year.
Brilliant. Well, thank you for everyone for coming and listening to us today. I hope you found the session interesting and engaging, and I'm sure look forward to connecting with many of you in the future. Thank you.